This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, July 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at September corn up a penny and a half at 4.43. August soybeans were up 4 at 11.99, and September Chicago wheat was up 4.5 at 6.79 and a quarter. We had a number of export sales announcements here this morning. The first one, 340,000 metric tons of soybeans to China is for 26 new crop. Also announced 256,634 soybeans to Mexico, also for new crop 26. And lastly, 110,000 metric tons of soybeans to unknown destinations, also for 26. Good morning, fellas. We've made it to the end of the week. News overnight here into yesterday, Brazilian tariffs. The Trump administration using Section 301 supposedly to take place July 22nd is going to levy a 25% Brazilian tariff. There are exempted products. Beef, coffee, and certain energy products are exempt. However, soybeans, meal, oil, and ethanol so far are not on the exempt list. They're also a couple days later, they're going to be wrapping up a forced labor investigation, July 24th. That those findings could levy an additional 12.5% tariff on certain products, bringing the overall total up to around 37.5% if things work out the way that they're looking that they're going to. So we're going to be obviously keeping a close eye on the weekend weather here as we go in and close to this afternoon session. So, Dustin, a lot going on. Give us a few thoughts here this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, a lot going on. You know, we had some major, areas that we've been talking about a lot for, I'm going to pick on December corn. So let's pull up that chart again. Those major moving averages, the blue, red, and gray lines there represent the 50, 100, and 200-day moving averages. Yesterday in the overnight hours coming into yesterday, we had topped those levels for the first time since we started the break there in early June, and then finished below them. So it's kind of a bad trade. It's making for a bad setup. Today, we're finding that we're starting to creep back above some of these major moving averages. We still have a lot of question about how the weekend weather is going to change. But I would note that what's happening in the Middle East is still an impact on our markets. And so crude oil is now hitting at its highest level in weeks for the September contract. And apparently we attacked some energy infrastructure, which that was kind of a red line where they were going to kind of beef up their efforts to prevent oil exports from the region, including potentially the other strait that controls 10% of flows, Mandeb. So if for some reason the market's concerned about that today, that could be why we're getting crude oil back into the 80s and why we're starting to see some support in grains as well too. Even though they're completely separate products, I still think that there's an impact from that to watch. And weather is not a slam dunk either. We at the current forecast, I think some yield destruction could happen. I don't think we're far off of trend right now, personally, but we still have a lot of fill time left to go through the season, and to end up in a sub 180 yield where corn needs to ration some of that record demand is not off the table yet. So what I'll be watching is how does the weekend shape up, for a forecast change. We get into those higher confidence forecasts, what's happened over the weekend.
Very good, Dustin. Thanks for kicking us off for this morning. And now, as we visited about and teed up yesterday, we've got a very special guest with us here this morning. Josh Linville is Vice President of the Fertilizer Group at StoneX Financial. Josh, good morning. Thanks for joining us here on the War Room.
Can you guys hear me okay now?
Sound great.
I did a restart yesterday, and my computer's fighting me this morning. It's like, hey, Josh, take a 3-day weekend. Just go ahead and get into it, guy. Pop a beer. It's okay.
That's all right. I mean, there's nothing going on in the markets, Josh. It's pretty quiet.
It's not like it's the worst time that this could possibly happen, right?
Yeah, no doubt. Well, listen, man, thanks for joining us here in the War Room.
Yeah, man.
You know, obviously on the forefront of our minds, and I'm sure yours as well, we did see the announcement of those 25% tariffs on Brazil. There are some exempted products, but I think, you know, the overriding questions that we're getting constantly from our clients and even within here in the War Room is just maybe understanding a little bit more of the South American fertilizer situation as it pertains to the Middle East. And I guess what your opinion overall is, how does this thing shake out in the next 6 to 12 or 18 months?
Yeah, so if we're focusing on the South American marketplace, I mean, I'm still not in a mode where I'm thinking, oh my gosh, they're going to go without. And let's face it, February 28th, the war started. I remember waking up that Saturday morning, checked my phone. We had started striking Iran. I thought, crap, here we go. This is the worst case scenario. This literally doesn't get worse than this. And I was 100% in the camp. We're going to have shortages. We're going to have problems. Guys, it is July 17th. And I can tell you, going around the world, and we just got done with a big fertilizer conference earlier this week, and I asked everybody the same question. Did you see a single place in the world that went without product? No. The world got through it. Now, doesn't mean there can't be problems later on. It doesn't mean the higher prices aren't coming, but I think things will continue to be snug. But everybody's gotten through it okay, and I still expect that to be the case for South America. And in fact, when you look at it, they have been getting a lot of imports of things like nitrogen without their price really calling for it, without their price really being a premium to the world. And I think it's more indicative of just a marketplace that had a little bit of extra carryover. I think we saw probably, globally speaking, 3 to 5% nitrogen application rate demand destruction. Now that's going to be higher for some places that are very, they get impacted by the price, right? They're seeing it. That's going to be places like India and China where they don't care because they don't see the global price. And so I think just at the end of it, I think, we cut it 3 to 5%. I think that shocked a lot of the market. If that turned out to be true, it'll shock the crap out of me. And so they've already got a pretty good start on it. However, and this is something I've been warning folks. And I warned folks when, you saw the New Orleans, Louisiana barge market drop down to 350, all the way down to it. We're going to have this period of quiet. We're going to have this period of weakness. You're going to see prices fall. You can't maintain where it was when we were trading, $700, $800, $900 a ton. It takes a lot of events constantly happening to make that happen. But I do think the supply tightness is something we're going to continue to talk about going into spring of 27. And I think Brazil is going to be the first prover of all of this. And while they've been seeing a lot of imports come in that they haven't really called for, they're also still behind. They're still not really well ahead because, again, their farmers are doing the same thing. They're looking at the grain price, they're looking at the fertilizer price and saying, I don't want to buy this. This doesn't make any sense. I don't feel the need I have to buy this. And that makes the distributors say, well, if my farmer's not going to buy this, I'm not going to buy this. And if the distributor's not buying it, the importer doesn't want to take the risk. So you've got a supply chain that's going to be very, very dodgy going all the way through this entire thing. I don't believe it's going to be something where we're going to have shortages and, oh my gosh, we can't get our hands on it. But I also can't completely rule it out. Because if the market waits and waits and waits, well, all of a sudden, there's a point in time on the calendar you can't wait any longer. It takes a certain amount of days to move a vessel from, say, like the Middle East to Brazil to the U.S. And if you got to distribute that product throughout the system before it actually gets into the hands of the farmer to go on there. So, sorry, that's a really, really long-winded way of me saying for South America, I'm not expecting any huge shortfalls and panic and everything like that, like we thought that was going to happen when the war first started out. but I'm still going to be watching for it pretty hard, if that makes sense.
Yeah, and Josh, I guess the other piece to that is, we've seen urea prices that have broken pretty significantly. I mean, that's well tracked across the industry. What's your opinion of the other major inputs and where they're at relative to where we were, I guess at the beginning of this last season?
Yeah, so everybody's focused on nitrogen. That is the one thing everybody talks about. And of course, you look through the cycle of when the war started. It started with oil, and then it started with energy. And all of a sudden, fertilizer became a pretty big thing, and we focused on nitrogen. A third of the world's nitrogen exports come from the Strait of Hormuz and all that. I'm here to tell you guys, phosphate is a significantly more impacted market than nitrogen is. Now, that's not to sit there and say nitrogen's, okay. It's not. You've got, from a urea perspective, you got 3 of the world's largest exporters coming from there: Qatar, Iran, and Saudi Arabia. That's no small thing. But a bigger thing, it goes back to the energy, the lack of LNG exports. You think about where those LNG exports go to, places like India, one of the biggest producers in the world. Their production got impacted because they didn't get those normal flows. But phosphate is worse. And that's the reason you haven't seen a major price fallback on phosphate when the strait looked like it was opening and everything else out there. Well, number one, the global phosphate market is controlled by 5 countries. I mean, that's really it when it comes down to it. And that's China, Saudi Arabia, Morocco, Russia, and the US. Well, Saudi Arabia is stuck behind the strait. Now, they've done a phenomenal job of trying to trickle those tons west over to their West Coast ports and export from there. You can only do so much. You're tearing up the infrastructure. You can only go so hard for so long there. But the bigger thing is, and again, this conference that we just got done with in New Orleans, the biggest talking point for the first time in my 24-year career, everybody talked about sulfur. And it's because half the world's tradable supply comes from the Strait of Hormuz. 17% of it comes from, is it Kazakhstan up around Russia? Right now, 2/3 of the world's sulfur supply is just gone. It doesn't exist. And that's why it's such a big deal. And you hear this from Mosaic, and they cut back their production. They're running out of sulfur. Their supplies are dwindling. You hear this from places like Morocco. You hear this from China, actually. Guys, China's the world's largest exporter. In 2021, they exported 10 million tons. You know what they've exported this year? Nothing. Because of the sulfur, because of all these things going on. And the other thing is, so sulfur's one of the biggest variable rate inputs for phosphate production. The other is anhydrous. And congratulations, 3 of the world's biggest anhydrous exporters are stuck behind the strait. Production around the world is dependent on some of the LNG exports that come from there. So everybody's focused on this nitrogen piece, as they should. It's the most important fertilizer. It's the one you have to put on year in, year out. Phosphate is impacted more. Now, you can variable rate that. If your soil levels are good, you can skip it. There's a lot of things you can do. You're not as dependent on the program of phosphate like what you would do with nitrogen. But it's still very, very important. And you can only go without it for so long before there starts to be an impact. And guys, the phosphate price has not made sense versus grains the last couple of years. Some folks have started to cut back, and they're going to get shoved into a corner where, like, you've got to make a choice. Either put it on or your yields will be lower. There's not a wrong answer as long as you make a good, rational decision, but you've got to make a hard choice. So, yeah, that's the problem. Is everybody's been excited. You know, the Trump administration has looked so much at this, and they suspended the tariffs on Morocco. And I think one of the officials said, phosphate prices in the U.S. are going to drop 22%. DAP values updated everything yesterday evening. DAP is flat since that announcement came out. MAP's up $20. Listen, I say that tongue in cheek. I always sound very, very mean to the Trump administration when they talk about fertilizer. I think they're doing the best they can with the knowledge that they have. But I think they've gotten some bad information because this market is so fragmented. There's so many different voices all trying to say something different. And unfortunately, again, when it comes to fertilizer, it's an education void, if you will.
Gentlemen, that's good stuff there, Josh. Any questions from the boys? Dustin, I think you had a question for Josh.
Yeah. So, it's obviously a side that we don't trade really much at all. You know, the fertilizer side, we try to track it But just want to make sure, just from an educational piece for us and our viewers and our growers, like you were mentioning, it hasn't been a problem yet. The price action is clearly showing that the buyers haven't come for it yet. If they're saying it doesn't make sense, then the price is not going to go up. That makes total sense to me why it dropped. And I'm just wondering, is the NOLA Urea contract, is that what we should be watching, or is there other global price indexes that we should be watching? How do we get the indication that it is starting to be an issue where they might have to go without?
On the global urea sector, there's going to be 3 markets I'm going to watch, and they're all CME based. The best one out there is going to be NOLA Urea, UFV on the CME code. That's going to be the number one thing that you watch. It's the most liquid. It's the one almost everybody uses. It sees the most liquidity. Again, tongue in cheek, compared to grain, it's laughable, but versus the world of fertilizer, it's the traded one. For a better indication, now globally, normally speaking, historically, I would sit there and tell you it's Middle East, but that Middle East contract to a certain extent is bastardized right now. And that's because the strait's closed and then it's open and it's closed. So there's a little bit of questionality as far as where the hell the price is coming from. If you can't ship a vessel out of there, how do you have a price? So there's a little bit of I don't know if I feel good about that right now. The other one would be CFR Brazil. There is a CME contract out there, the CFR Brazil. It's actually picked up fairly decently, especially in the wake of this entire war operation in the Middle East.
Okay, good to know.
Yeah.
So because in my mind, the corn market is completely changed with Brazil's production, safrinha production. And if they're going to cut back even in the slightest, we're going to have to start adjusting what we expect maybe for even spreads today that we might be trading, right? Just because we're coming off of a record demand year for U.S. corn. And if there's any sort of question even about future global production from just slight cutting back and skimping on these, then we're going to make assumptions about that. So thank you for this.
Yeah. And I'll tell you, I think it's a stupidly good point. And again, I'm talking from I'm not a grain guy. I'm not smart enough to be a grain guy. That's why I do fertilizer. I'm not that smart. But one of the big things I've been trying to tell people is do not make the mistake of saying, well, normally. This isn't normal, guys. What we're living through is not normal. Your spreads are not normal. Your trade flows are not normal. Your production is not normal. There's nothing normal about this. In fact, I get myself into my own trap. So if you guys see my stuff, you know that I like to do the whole ratio approach, right? I don't care about the flat price of corn. I don't care about the flat price of fertilizer. I look at it from a manufacturing standpoint. How are those two things together? What is that value? And so like nitrogen, I would sit there and always tell people, well, going back to 2018, and I would say that because normally that's the start of the new North American nitrogen marketplace. All the debottleneck construction projects were done. New production was done. Our urea import flow lowered. It was the start of a new cycle for us. Well, that's stupid, Josh. That's not normal. 2018 is not where we are today. Actually, we got to go back to 2022 because that's when Europe stopped or slowed down their production because they pissed off the Russians on the Nord Stream 2 pipeline. That's when Russia invaded Ukraine. That's when all this craziness happened. So I think one of the biggest things you can do is sit there and say, okay, this is what normally happened. This is historically what happens. And just say, let's forget about that. Let's take a fresh look at the market and say, why did those things happen? And how are they going to happen now with these things changed as drastically as what they are?
Very good. Josh, this has been incredible, man. I hope we can, have you on again. This is,
and I hope I can make it on time next time.
We won't hold it against you, man. It's craziness.
We're on the 8th floor in my office building. We're on the 8th floor and we've got a nice little balcony. You can overlook the Kansas City skyline. And one of these years, I'm going to see how far I can throw this laptop. I'm going to see just how far down the hill this sucker will fly. I can frisbee this thing.
No, that's great stuff. I know all of us here at AgYield in the War Room, we appreciate you taking the time this morning. We'll certainly have you on again as we need updates and things like that. So with that, let's move it on with the show here, guys. Ben, why don't you give us a few thoughts to wrap up here on the grain side? It was interesting. I thought that was good stuff with Josh, kind of putting some flavor on a lot of the things we've been talking about. But take us into the weekend here, Ben.
Not normal, right? This is not a normal sequence of events. So just watching this morning, I think there's some trepidation from anyone to get overly committed right here, especially when you look at the variables of where is yield and the question on acres, much less weather. Technically, I think maybe we could be losing a little bit of momentum, but I thought that twice on this rally, and we tend to bounce back. Be watching for corn to have a weekly close above 461.5, I think it is, for to have another higher weekly close. Below that, I think there's definitely caution.
Very good. Ryland, real quick, we're not going to take a lot of time because it's not worth it. The cattle market is beating everybody's brains in, but we're starting to see kind of the polar opposite on the hog side. So with one taketh and one's going to giveth, I guess. So
yeah, absolutely. Well, the 14th time's the charm, I guess. I mean, 14 days lower in a row. You got cash trade 10 to 11 lower. The South started picking up anywhere between 235 to 238. So this is definitely a little bit weaker than expected. So I think that's kind of bleeding into the board right now. We're pricing in that kind of lower cash news. Still continued to see lower beef prices last night. Choice new lows for the move 368.38 down 290. Select down 349. So I think everybody's just expecting a big bottom to show up here and the buyers to swoop in and save the day. This has worked every time, so maybe this time's different, but obviously there's still another several weeks before seasonally it seems like it starts to catch. So we are oversold. Wouldn't be surprised to see some short covering into the weekend though here. So maybe a little bit of back and forth trade. And on the hogs, yeah, things are looking up. We've seen a decent chunk of short covering. Open interest was down almost 3,000 contracts. Carcass starting to pick up a little bit of momentum here. Belly's up 416. So I think there is a little bit of cautious optimism here. We made a new high for the move in August, the highest since May 28th. So it just kind of feels like we're ready for some follow through here, but we are creeping up in some longer term moving averages, 200-day moving average, overhead resistance. It's still a little ways away, but kind of looks like we're making that trudge. So it just feels like if you're a producer on the production side, maybe a good time to start looking at that downside coverage going into the tail end of the year.
Very good. Appreciate the update there, Rye. We've done it, fellas. We've made it through another week, which brings us to everybody's favorite segment of the week, Fun Fact Friday. Brian, what do you got for us?
Thanks, Dan. Happy Friday, everybody. I'm sure most of us, not of all of us, have seen the viral video of the grandfather getting launched 10 to 12 feet in the air by the bison in Yellowstone. It seems like he did everything right, but that bison was not allowing his picture to be taken that day. So we can laugh about it now knowing he's okay. Thank God that he was wearing suspenders, or it might have been a wholly different viral video right there. So I went down the ranger rescue logs of people not doing it the right way. So a ranger in the Grand Canyon got a frantic call for a helicopter medical evacuation. A traveler had decided to hike deep down into a rugged, scorching canyon completely barefoot to feel more spiritually connected with the earth. He had to be airlifted out after shattering both ankles on jagged rocks.
Ugh.
Yeah. This next one reminds me of someone that we all know very well. In a Western Park dispatch, a group of frantic frat brothers sprinted into a ranger station past midnight. They were carrying one of their friends who was completely butt naked. After a night of heavy drinking, he wandered away from the tents, stumbled in the dark, and landed back first into a giant cactus, leaving dozens of needles lodged deeply where the sun does not shine. And lastly, I think Ryan will get a kick out of this one. In the Smoky Mountains, emergency dispatch came in from a campground where a man reportedly being trapped. Rangers rushed to the site thinking it was either a bear or a mountain lion. Instead, they found a terrified guy locked inside a giant bear-proof metal trash container. It turned out he got into an argument with his girlfriend, who then physically shoved him into the bin, slammed the heavy safety latch down, and drove away with their car. So, there's always something going on in the wild. So everyone have a good weekend. And then I do think if anyone did miss that video of the grandfather being launched, I think we have a pic of it.
Oh, we did it.
Oh no!
Oh. It's the suspenders make it.
Wow. Yeah. Happy Friday,
we have to tell everybody there's the it's not even an inside joke anymore, but all week we have been having to watch Brian watch this video on repeat on a constant loop, and he giggles just like he is right now watching this video. So we are thankful that the guy's okay, because I guess we can laugh about it. But anybody trying to take pictures of a buffalo, that's I don't think we need to worry about that.
Have to frame that one, Brian.
Yeah,
that's a good one.
That's good.
That needs to get in the background.
100%.
All right, we did it. Everybody, link in the description. Check out the War Room Report. Access to premium content, much like we did today, bringing in special guests. We'll do special reports, deeper dive into everything we talk about daily here on the War Room. So be sure to check out the War Room Report. Also, a portion of those subscription fees goes directly to support the AgYield Next Gen Foundation, which, of course, has awarded 5 very deserving college students this year with significant scholarship dollars. Check out the foundation. If you got any questions on how to support, let us know. We can get you set up. I appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you again on Monday.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.